Hello everybody. So today a quick video about Tesla and Bitcoin. I figured might as well group Tesla and Bitcoin together if I want to talk about Bitcoin, because a few people, many people don't want to hear about Bitcoin. But again, if you go in the Bitcoin crowd and you talk to folks who are into cryptocurrencies and Bitcoin, which are two different things, by the way, they typically don't understand stocks and they may not even understand Tesla. But to me, these two assets, be it Tesla or be it Bitcoin, to me, they are kind of the same story. And that's the story of disruption. And that's the story of disruption that is not easy to accept for incumbent, because the industries that are getting disrupted are so big, so large, so wide, that we don't want to believe that disruption can happen to this sector, but it really, really, really can. And disruption happens slowly and then suddenly. And what I mean by that is that we've seen these assets in the case of Tesla. You know, we had a big run in Tesla in 2014, another one in 2017, 18-ish, and another one in 2020. Bitcoin, we tend to have a big run every 4 years shortly after the halving. So every 4 years. So in this year, the halving is in 2024. Many of us expect a step change in the value of Bitcoin again, and that's just the way it goes. That's the nature of what happens. And I want to point out that these assets are much different from the tulip mania. The tulip mania has often been used to describe Bitcoin or to describe Tesla, saying, oh, it's just like the tulips, just like what happened in Holland in the 1600, where the price of tulips did about 150 to 200x and then went right back to zero. Well, I want to point out that if you really look at the boom and bust of the tulip mania, it was really one winter where we saw much of a price appreciation and much of the decline, and that decline was much steeper than even many of the declines that we've seen in 2022, 2023 with the rise in interest rates. But even in Bitcoin, that decline wasn't that bad, all things considered, right? We went down to a 15-ish thousand from a high at 69,000. That's nothing like a decline from 200 to 5 in a matter of 6 months, which is what happened during the tulip mania, which is, of course, we really don't care about what happened in the 1600s. What's important is that this is often used to say, when something goes up too fast, it can come down just as fast. Well, that's not the case, because these two stocks, they've been going up for well over a decade. Both assets have been going up for well over a decade. Both assets are a tie on the quickest asset to get to $1 trillion. And granted, both assets are still not back at $1 trillion, but in my mind, they will be. They're not at those levels yet, but they reached those levels in 2021. Both of them were ties for the asset that reaches 0 to $1 trillion in the fastest at the fastest speed possible. So these are very disruptive. And for Tesla, we've had events like the credit rating, we've had events like the S&P 500, we've had events like the new products being launched, and for Bitcoin, we have other type of events as at least in the mainstream finance. We had a futures ETF that was really, really big, marking the peak of the prior bull market for Bitcoin. And today we get the spot ETF, which marks the coming of new inflows into the asset. And I want to pause on the returns, because it's important to look at the returns. When you look at these two assets, let me bring to front here. When you look at these two assets, you can see in 5 years exactly, we are at roughly a 10x for both assets. We're at a 10x for Tesla, more than a 9x for Bitcoin. We're at roughly a 10x. As soon as the GBTC discount discount, which should be low single digit right now. As soon as that discount abates, we're gonna get to roughly a 10x. So both assets have had fairly similar performance, if you ask me, fairly similar performance, 10xing. And the question to ask, of course, is today Tesla is a $700 billion company. Can it be a $7 trillion company? Well, Elon Musk has guided Saudi Aramco plus Apple combined, Tesla would be a greater value than those two combined. And then he's hinted on Twitter about a 5-year timeline. So even call it 7 years, another 10x is more than possible in my view in Tesla. And for Bitcoin, what one should compare Bitcoin to? Well, in my view, it is, at least in our foreseeable future, at least for the next 10 years, the goal is gold, right? The goal of Bitcoin for now is to overtake gold, and it is well on its way to do that at the speed that it's growing, and another 10x would get us pretty close to that level, especially if you consider that Bitcoin takes a lot of money away from gold. People that used to invest 100% in gold for their allocation in the portfolio to this asset that gold is, may say, I'm going to do 70% gold and 30% Bitcoin, and that's for the more quote-unquote traditional investor. Bitcoin is my second position. Tesla is my number one position, and I own no bonds. I don't have any bonds. Bitcoin is my single and only bond alternative, which is why it's such a big portion of the portfolio, because some of my investments are actually not investments, they're savings, right? They're actually not investing in a company and taking a risk. They're saving, right? And Bitcoin is a saving technology. It is not an investing technology, right? Bitcoin has no CEO. There's no such thing. It is much closer to saving money on a bank account, to saving dollars. Bitcoin is much more close to that than, say, Tesla, where you are taking on company risk, management risk, all sorts of business risk, competition risk, etc. It's a regulation risk, etc., etc., etc. So here's the truth, though, in my view, about both assets, is that Tesla and Bitcoin, they both threaten to disrupt very, very large portions of modern society, which is why they are some of the most expensive assets already. If you look at Tesla threatens what? They threaten the internal combustion engine / gas cars industry. They threaten that entirely, right? Keep in mind, the market share in the United States for Tesla is about 60%. That's the market share for brand new EVs sold. And we've crossed thresholds in certain states like California, where the new car sold, 1 out of 3 new cars sold is an EV. And, if you see a future where EVs are going to be the thing, because they are 10x products, because they are a 10x improvement over what used to be, over the gas cars, right? They cost 10 times cheaper to fuel. They accelerate much better. They have many, many fewer moving parts, very little moving parts, so they require very little maintenance. They last longer. They have so many advantages that you don't have in a gas car, and the level of batteries is now on par. In my view, it is now on par with gas vehicles, with a new Model 3 being introduced in the US that is going to have 423 miles of range in its more expensive version. So if you have a 400-mile range electric vehicle, you are on par with gas cars, and of course, electric vehicles are going to get much better range than gas cars in very little time as we get better at building batteries year after year. We increase the capacity of batteries. We increase, how much energy we can store on batteries at about 10% a year. And so that compounds itself very quickly. Tesla, of course, disrupts the car industry, but not just that, right? It's the entire fossil fuel industry that you're going after if you're going after the ICE and gas cars. Well, not exactly the entire fossil fuel, but about 70% of fossil fuels are being used to power transportation, and Tesla aims to disrupt that transportation. That is the goal. And if you take into account the new business lines of Tesla in the mega packs, for example, you eliminate peaker plants. And peaker plants are mostly using natural gas. Some of them use coal, but most of them are natural gas. And so you're threatening coal energy generation and natural gas energy generation through their other business division, which is the Tesla Megapack. And if you follow energy storage behind the meter, front the meter energy storage, you know that Tesla is the leader in that space. It is the absolute leader in that space. It is ahead of companies like Fluence, for example. And even if it is installed by other third-party companies, oftentimes, like STEM, for example, is an installer of Megapacks. We know that Megapacks are the number one producers of these packs, and many companies just install them on behalf of Tesla. That's part of a business model. And what else is Tesla threatening to disrupt? Well, if you deal with energy, we have no choice but to talk about labor. At its essence, human labor is energy. It's just our energy that we put to lift bricks, build buildings, lift boxes, or that we put in our brains to compute ideas and compute different plans for our companies. It's all a matter of energy. You know, if you study the human body, you may know that the brain in the human body uses so much more energy than the rest. To me, it's all a matter of energy, and surely enough, we see this with things like FSD, right? Solving FSD is all about getting more chips, powering them more often. It's very energy intensive. AI is very energy intensive. And the same can be said for Optimus. One day, because it seems like they're moving faster on Optimus than a lot of people thought. A lot of people are very surprised, especially by the video that was released 4 weeks ago, just before Christmas. Absolutely insane speed of progress on the Optimus robot. It's not so much the first version of the robot that's impressive as it is the speed of change and the speed of progress. So we have a Tesla right there that's about to disrupt the nature of so many things that we're familiar with, whether it is fossil fuel industry, whether it is gas cars, or whether it is much of the way we understand forms of human labor. And of course, FSD has been an obvious disruptor coming for a very long time, right? At least 7 years we've seen FSD coming. We are now seeing the outlines of something else coming that Tesla could disrupt, which is basic human labor. And if it disrupts that, the sky's the limit, in my view, as far as the valuation of a stock like Tesla. It could become the most valuable company in the world, in my view. That's no investment advice. That's just what I do. And Bitcoin. What does Bitcoin do? Well, Bitcoin threatens to disrupt so much too. It disrupts how we save our money, and we don't see this in the U.S. because the U.S. Prices are pretty stable in the U.S. in general, despite the fairly high inflation we've had in 2021/2022, although that inflation is abating, and I actually believe prices will decrease in USD too, thanks to the increases in productivity. But what inflation, or at least the perception of inflation, is teaching us is that there's a different way to save money. You don't have to save your money in dollars. You can save it in something else than dollars. Of course, the gold people have figured that out a long time ago, but gold is not really appealing to the digitally native investor, which, by the way, if you invest for the future, I believe you should invest for the digitally native investor, because they are going to be the majority. You don't want to invest in the people who will inherit the gold, sell the gold, and put it into something else when they inherit the gold. In my view, you want to invest in where Gen Z, where millennials, where Generation Alpha after that are going to put their money. And if they're going to save, if they're going to be faced with the choice, what do I save the money with? Do I save it in USD? Do I save it in the form of gold, or do I save it in Bitcoin, knowing that I don't consider investing in stocks saving, right? Investing in stocks should return more than any form of saving, even Bitcoin, for the very reason that you're risking something. Stocks have more risk than just saving. Saving has less risk than stocks, which is why if I were to make crazy prediction and try to think crazily, I believe the returns of Tesla will be higher than the returns of Bitcoin. But the risk of Tesla is also much higher because you have a lot of execution risk that needs to be baked into the valuation of Tesla. If you start thinking like a Bitcoiner and you're thinking one Bitcoin is one Bitcoin, well, guess what? One Bitcoin is indeed one Bitcoin. And we can say that because we know there is a finite number of Bitcoin. We know there will never be more than 21 million Bitcoin. Therefore, you can say the worth of a Bitcoin today relative to all of the other Bitcoins is always one Bitcoin. That's the worth of the Bitcoin. One Bitcoin is one Bitcoin. You can't say that for the US dollars. And if you've been following the channel for a while, you may remember these screenshots that I was showing with houses. Say a house, a Sears home built in the early 1900s was about $1,000. Today, that same house for sale in a mid-sized American city is about $400,000, and that's because that's the value of the dollar that has entirely devalued. That, if we adopt Bitcoin as a saving mechanism, can't happen to those who save in Bitcoin and those who actually start to think in Bitcoin terms and start to accept that one Bitcoin is one Bitcoin, just like one house is not $500,000, it's not $1 million. One house is one house. It's where you live, it's where you raise your family. That's just one house. One house is one house. One Bitcoin is one Bitcoin. Unfortunately, $1 or €1 is not $1 or €1 because you're expanding the denominator. You're expanding how many of those are out there due to the banking system that is ever issuing more money in the form of debt that is never repaid, right? New debts are created to pay old debts. In fact, in 2023, we had an opportunity to pay back our debts with the March 2023 banking crisis. The market, capitalism, said, okay, let's go, let's do it. Let's have a big portion of the US banking system go bankrupt. Let's eliminate some dollars. And we said no, we jumped to the rescue. We went back in and printed with the BTFP program well over $700 billion right now to save banks. So the only guarantee with dollars is that there will be many more dollars in the future than there are today. The guarantee with Bitcoin is that there is only one Bitcoin compared to 21 million. It's 1 over 21 million. If you own one Bitcoin, you own 1/21 millionth of the Bitcoin network, of the Bitcoin money. And that's a big deal, in my view. Then there's other disruptions to Bitcoin, and I can't list them all. You literally have entire YouTube channels, which I love, by the way, describing all of this about Bitcoin in great ways. But as far as investors, what concerns us, for example, is a threat or disruption of traditional finance. And this is one of the thoughts that I've been developing, which is if traditional finance doesn't adopt Bitcoin will disrupt traditional finance. And I think what we see with the ETF is an attempt of traditional finance to adopt Bitcoin in a way, but an ETF is an ETF. You still have counterparty risk in an ETF. You have counterparty risk when you own stocks for your broker. Granted, it's safer counterparty risk than say for bonds, and I'll get to that in a minute. But it's still a risk. It's still a risk, right? If you own shares of a broker, they likely go ahead and lend them to people who short those shares. So that's one thing to keep in mind. But blockchain rails in general, and Bitcoin really is what pioneered and invented blockchain. And sure enough, there are innovations happening on the blockchain network with the Lightning Network, with the layer 2 solution that's being built on there, and all of the different layer solutions on Bitcoin. You have what I call blockchain rails, the rails of blockchain, and that is clearly a threat to insurance, to banking, to mostly insurance and banking, financial institutions in general, traditional financial institution in general, which mostly work with old system and paper and pencil and humans to power these, can be replaced by a blockchain. And a blockchain will be able to do. And when we see projects, if you dig deep into crypto, you see a lot of projects held on blockchain, whether it is insurance for farmers, and whether it is loaning your shares, wrapping your Bitcoin, putting it on another protocol, loaning it to someone else to earn a return or to borrow against it, and even Bitcoin mortgages, right? Bitcoin mortgages, you create 3 keys for your Bitcoin, you give 1 key to the lender, you keep another key. That's going to be a thing where you're going to be able to pledge your Bitcoin on the blockchain and borrow against your Bitcoin. There's going to be many applications, in my view, in the blockchain space, in the Bitcoin space, that entirely could disrupt traditional finance. And if you're Gen Z today, you may be compelled by some options, for example, from Coinbase, where you can just translate your entire salary to crypto as you receive it, automatically translated, and then you live in a fully digital world. And you forget the steps of traditional finance. Even stable coins are a major disruption of traditional finance, and Bitcoin threatens to disrupt that. And so how big could it be? How big could this idea be, right? If you pull up a map of the S&P 500, we can see that finance is a big portion of it. Okay, it used to be much bigger. It's been long distanced by technology, but that's not true for most of the world. In much of the world, the traditional finance, the banking sector is much bigger. Like I can think of a lot of European countries that have a much bigger finance/banking sector. It's actually an anomaly for the US to have so much of its economy be based on technology. But that's because we have a lot of big tech firms here. But anyways, that threatens traditional finance. What else? Well, it threatens, and this is not as much a threat as it is a creating of a new understanding of counterparty risk, right? Counterparty risk really comes alive when we see things like every other year, it seems now, are raising the debt ceiling. And politicians saying, hey, we're not going to raise the debt ceilings unless you, the other party, agrees to this, and that condition. And what does that do to your risk-free rate if every 2 years you have a risk of the U.S. not defaulting, but being late on its coupons and being late on its payments? That's counterparty risk, right? The U.S. ratings getting downgraded, that's counterparty risk. And I'm not even talking about counterparty risk for companies, right? What happens if you own bonds from AT&T? I would be very worried if I owned bonds from AT&T. We are about to live in a world of satellite internet. Right? If you follow SpaceX, but SpaceX is not the only one doing it, but you know that they've described they've deployed their new version of satellites, which will enable 5G style speed on your phone straight from satellites up in the sky. And so what does that mean if a company has issued 30-year bond to pay for DSL in your neighborhood, and there's 20 years left or 15 years left on that bond for DSL? And what does that mean if this company has just been rolling over the debt, right? And not really paying it off as technology becomes leapfrogged. And so counterparty risk, in my view, is going to become very real for a lot of these legacy companies who have all of this debt that is almost going to be backed by an asset who's going to lose a bunch of value, right? I could tell you about GM Financial. How many trucks are backed by GM Financial's loans that were issued by GM? And what if the value of the collateral, the titles of those trucks, what if it gets halved? What if a company like GM had predicted a truck be worth 5 years from now? They say, based on my data, this truck's going to be worth $75,000 5 years from now. If it's a very high-end premium truck, one pays $120 today. And then 5 years from now, nobody wants to buy a gas-guzzling vehicle. Everybody wants to buy an electric vehicle, especially if it's a truck. Because if it's a truck, electric is much better for towing. It's much better for so many applications. Then you end up with a gas truck being worth $20,000 instead of being worth $70,000. So what does that mean for your counterparty risk? Well, it means it goes up like crazy, because if you own bonds, right? If you own somebody else's debt, you better be sure that the way things have been in the past will be the same in the future, and that's not how disruption works, right? Disruption happens suddenly, and so I think we're going to see a lot of disruption. That's why I sleep very well at night, not owning any bonds. And lastly, we're creating a new asset class that cannot be debased. And that's the story of money in the form of Bitcoin, which money in the form of Bitcoin as features that is very similar to, say, a mature stock or a mature company, right? If you look at a company like Apple, Apple stocks becomes more valuable in two ways. First of all, you have revenue growth in Apple stock. They grow revenue at the pace of the economy, so that's good. But it also becomes more valuable because they buy back their shares. So your ownership of Apple actually goes up slightly year after year. Well, for Bitcoin, we have that same system built in, because yes, there will only be 21 million Bitcoins ever issued, but you have people who quite simply forget their keys. As people like to say in the Bitcoin space, they have a boating accident. They say they forget their keys. You have people who truly forget their keys. And you also have new forms of thinking that happen in the big Bitcoin space, which is, for example, the idea that if say, you have no heirs, no children, and you're about to die, maybe the most generous thing one can do is to actually not give the keys to anybody, and then create deflation for everybody else using the money, because you're creating deflation for everybody if you don't give your keys to someone else, right? If you want to take your money to your grave and make it disappear, and strengthen the value of Bitcoin for the rest of everybody owning the asset, you can decide to do that. That's a first. That's a very, very, very first. Never in the past would someone who dies be able to say, nobody's going to get my money. Would be able to say, no, I'm just going to contribute to humanity regardless of any other consideration, regardless of taxes or anything. I'm just going to benefit humanity by just disappearing and keeping my code for myself, and the code will anyways. It's just fat, and these are new philosophical ways of thinking, which is another rabbit hole of Bitcoin. Bitcoin is not just money. Like, if you follow Bitcoin, you realize it's about an investment, it's about money, but it's also very philosophical thinking as to, for example, what does Bitcoin mean for going to war? Well, it may be that people will be less inclined to go to war if you store money in the form of Bitcoin. It's a money that desensitizes theft, and that's a first. That's a first. That's never happened in really the history of the world, because for most of the world, your belongings could be taken, be them by abusive governments or taken by simply thieves. That's something new that happens with Bitcoin that can't happen. So this is a complex asset in my view, but love this asset, and I've been in this asset on and off since 2015. I love Bitcoin very much, but of course Tesla or Bitcoin, controversial assets. It's probably fine for me to say this on this channel, but if you go to a Thanksgiving party, as we say in the US, Thanksgiving family event, and you try to talk about either assets, you might still get laughed at for many years, and that's where I think my edge comes from, and that's where the edge comes from is you understand the asset before over people, right? Remember, people were into iPhones at the peak of BlackBerry's popularity, and how BlackBerry was for serious people, BlackBerry was for a professional, and iPhones were kind of pointless. That was at the beginning, but people who deeply understood it and held the Apple stock, they're very happy today. Well, the same is true for so many different companies. Anyways, I sleep very well at night with 60% of my holdings in both of these assets. I hope I was able to show you that both Tesla and Bitcoin, they're 0 to 1 companies and 0 to 1 ideas. So what is 0 to 1 idea? That's what you call a new innovation, or a new form of change. That's when something new comes in a marketplace, and it's not just 10% better, 5% better, 30% better. It is orders, in the case of both of these assets, orders of magnitude better. And that's why people switch, because you have a new idea that is 10 times to 100 times better than what we used to have. That pushes people to switch. And we've rarely seen this at such a macro scale. This is at the most macro scale imaginable. On the one hand, we have energy, which energy is loosely, related to just about everything, but especially labor, and especially AI, and especially transportation. So Tesla is this company who disrupts energy, and then you have Bitcoin who disrupts money and time, and saving time, which is so essential. And so really the way to look at it is Tesla disrupts energy and labor. Tesla disrupts really Rockefeller's former empire. If you and the empire of the industrialists, of the early day industrialists. If you really start thinking about what Tesla is doing, what will, and Rockefeller's empire really needs to be put into perspective with Ford. Ford came after Rockefeller, and one wouldn't have been possible without the other, right? Henry Ford and the Model T. That wouldn't have been a thing without Rockefeller inventing, or pioneering, should I say, the gasoline engine, and realizing, oh, wait a minute, I shouldn't throw away gas in the river. I should probably use this unstable thing that tends to explode to power my factories. And that's what he did, and that's how kind of a gas engine became to be a thing a few years later. Well, Tesla is disrupting both of that. It's disrupting the energy used itself in cars. It's disrupting the refining and the getting of this energy by getting into energy storage and batteries. And Tesla surely is being helped by other companies in this effort, companies like Enphase, companies like, the Chinese solar panel manufacturers who are geniuses. I mean, the scale that China has reached in solar panel manufacturing is insane. Say in a video before that, plywood and solar panels right now are just about the same price, which is unthinkable. But it is nonetheless in front of our eyes right now. So Tesla is being helped in its disruption by many different aspects, just like Rockefeller was being helped in its disruption by a company like Ford, for example. But nonetheless, that's what Tesla is after. And, Rockefeller was the most influential company, I would say, in the industrial revolution of the world, in the industrial age. Few companies, no companies, were more significant than Rockefeller. Perhaps Carnegie still was a close second to Rockefeller, but no company was as significant as them. I believe it will be the same for Tesla, because let's not kid ourselves. When we look at a company like a Google, for example, that's great, but it's a revolution of information. A Facebook, for example, or social media, that's great, but that's a revolution of a telephone, right? Few disruptions are as profound as the disruption of energy. And that's what Tesla's after. And I find that extremely, extremely profound, because it underlies just about everything. And you can make a similar argument for Bitcoin. Bitcoin has the potential to disrupt finance as we know it today, money as we know it today. That is fiat. That is trust-based money as debt. But really, that debt being issued should be paid off, except we refuse to have these periods of deleveraging where we pay off that debt. And what we end up seeing is that if we went through the depression, a depression of insane proportions would have to happen for the dollar to be worth what it used to be worth. For the dollar to be worth what it used to be worth, we would have to have the world's most unthinkable recession. And that's just not going to happen. I don't think that's going to happen. And as a result of that, and that's one of the issues with the world of fiat today, which is money as debt. Debt is too easy to create. That's, I think, the main issue, and really that has been the case. In essence, it's been the case for thousands of years, but more formally, it's been the case since the invention of modern banking with the Medici family in the mid 1450s. Is really when this modern banking system with this assets and liabilities, credits and debits, this two-sided accounting, which really helps out the banks. Create money, right? Commercial banks are in charge of money creation. That dual banking system, that dual accounting system really helps them do that. That was an innovation from the Medici family. Bitcoin is disrupting that. Bitcoin is disrupting that in the sense that it's making this innovation obsolete, and it's now allowing money to have integrity, protected by code and protected by 20-ish billion. It's probably going to be much more as more miners come online, but about 20 billion-ish worth of latest generation semiconductors that protect the network through mining, such that even the most sophisticated nation could not hack the Bitcoin network. To do that, you need to follow the laws of thermodynamics, and that's also the beauty of Bitcoin. To break Bitcoin's code, you can't use clever code. It can't work with clever code. It has to work with actual computational energy. It has to follow the law of thermodynamics, and we've reached a point where the amount of energy that would be needed to just override one transaction, which, by the way, would not be honored 10 minutes later as the new block inevitably gets written and the miners, the validators inevitably decide to not validate that fake transaction. So it would be pointless, in addition to being nearly impossible. So anyways, that's the disruption of Bitcoin, and I don't want to get too deep into the rabbit hole. This video is probably long enough as it is. Anyways, clearly this is not investment advice. This is not financial advice at all. This is clearly just entertainment. As I like to say, if I were to say to a financial advisor that I'm 60% on Tesla and Bitcoin, I'm hoping they don't, but I think some of them might pass out, because it goes against all of the quote unquote conventional wisdom. So this is clearly just entertainment. No financial advice, no investment advice, just entertainment. I hope you were entertained. Please like, please subscribe. Have a wonderful day, and thank you for watching.